Hello, everyone.
Hello.
Hi.
How's it going over there, everybody?
It's doing well. Looks like we have a new special guest today.
We do, and we're missing somebody, so hopefully she jumps in a little bit. But
Yeah.
we wanted to.
We're going to fire her and replace her with Brett.
I know, exactly. Everybody wants to know about the mortgage stuff, anyways. So you know. But with things kind of changing, rates going up, we wanted to get a mortgage lender on the line and just kind of answer some questions, that a lot of people are having. There is Miss Kristen.
Hope she's ready. There she is, her grace. We're live right now, Kristen.
We are. You look beautiful.
Well, I just had my, you know how I joined the Young Professional Committee thing?
Yeah.
Yeah, we just had our first meeting. So can you see my vision board in the background?
Yeah, we can.
I'm surprised.
I'm trying.
You got to have your visions in front of you, not in the rear view, right? You got to like.
Dang, the glue's still wet.
As you're driving, your vision board's right in front of you. Like you're getting into like an accident or something.
Wrong kind of vision. I don't envision an accident. No, thank you.
Yeah, don't do that.
Yeah, definitely.
But anyways, so Kristen, this is Brett. Brett, this is Kristen, and everybody else, this is Brett as well. So I'm going to go ahead and let him go ahead and introduce yourself. Just tell us a little bit about you.
Yeah, sounds good. Thank you guys again for having me. My name is Brett Cooker. I work for Guild Mortgage. I'm a branch manager here in the Orlando area. I've been in the mortgage industry for about a decade. I've been in financing for over a decade. In the last 2 years, we've seen unprecedented, inventory and rates. Our team in the last 2 years have been in the top 1% of mortgage originators around the nation. And over the past 3 years, we've been doing consistently over 120 loans every year. So definitely know a lot about the industry. I can definitely empathize with people just because, we've also personally just recently bought another home. So we know what the market is going like. We know what, rates are doing. And we can see kind of in the short term and long term of what's going to affect people and how they can get ready to buy their house.
That's fair. I like it. So are you like an investor or are you just buying personal property?
No, just personal property.
Got it. Well, talking about it, there's a lot of myths going around nowadays, especially with everything. What's your take on where the market's going?
I mean, the problem is right, everybody's feeling inflation. So what's happening is the feds are basically trying to curb that. So we've seen rates accelerate way faster. So in the beginning of this year, I was talking with a couple of other realtors in mine, and I told them, I was like, look, we're probably going to see rates in the 6s, low 7s, maybe by the end of this year. I was wrong because it happened way quicker than that. But they're trying to get a curb on why things are costing so much. So in the short term, we still have inventory issues. We still have home builders that are building like crazy all around Florida, from everywhere from Jacksonville to South Florida to Tampa area, Orlando, Lakeland. I mean, you're seeing land just getting cleared out. But eventually we're going to come to a spot where the supply is going to meet up with the demand. But I think Florida right now is very well positioned. And if you look at other articles on realtor.com, on Redfin, on CNN, Florida is one of the top 3 places that people are moving to, just because of the weather, the tax benefits, as well as the cost of living.
Just because we're awesome?
That too. Yeah, exactly.
And what is that called too with the college, like Bright Futures or something? I think that's an amazing program.
Oh, absolutely. Yeah. Bright Futures is something where not a whole lot of states have that type of program that can really invest in their kids and help them kind of trampoline into being in the right spot and helping them out financially while still going to school.
I haven't heard about that. What is it called? Bright Futures?
Yeah.
Isn't that like kind of like it? I mean, it might be like a small part of it, but just from my understanding, it's like if you score like really well on your like SAT or you have like a really good GPA, you can pretty much go to any like Florida state school, like at like the state will like cover it for you. So you're going for quote unquote like free, less like room and board.
Yeah, Bright Futures, from what I understand, is like a scholarship program. So depending on how well they do will depend on how much scholarship that they get.
Yeah. I think that's really cool because I know like some people will like hire like a tutor for their child because they're like, well, I'll spend the $2,000 on a tutor, and then have them take the SAT, increase their GPA, and then make that back, because you're not, I don't know what the average cost is, but let's say like 50,000-60,000 for a state 4-year degree, I'm guessing.
Yeah.
So you're getting that for like, I mean, but if your kid's already naturally gifted, then you're paying, then you don't have to pay anything. But
What if your kid's gifted but doesn't do his homework?
You got to find another motivation.
Girls, that's all that motivates them. Oh, whoops, Kingston, don't watch this.
Right.
so yesterday we all like brainstormed some questions for you, Brett. So we're gonna kind of, I guess, put you back in the hot seat.
It's fine.
I think Kendra, did you take those questions down?
Just kind of going back to myths. So as far as down payments, a lot of people I've talked to believe that you need like 20% down for some of these loans, but talk about that a little bit.
Yeah, so with a lot of these loans, that's a big myth. Right now, we can get people in for as little as 0 down or is 3% down. So you don't have to have 20% down. And I've heard other people that are like, hey, I want to have 20% to have a better interest rate. The interest rate itself is not going to be that much of a difference compared to 3% down to 20. In fact, right now, with how interest rates are looking, kind of like buying in bulk and going to Costco or Sam's Club, right? The bigger the loan size, the better deal you're going to get. It's kind of the same thing. So people can get into a house, again, if you're a veteran or you're in a rural area, you can do it with 0 down. Or if you are in, Jacksonville, Orlando, you're buying in a normal metropolitan area, you can do it as little as 3% to 3.5% down.
Now, what are you looking at as far as credit for those kind of loan programs?
So minimum credit score, you can actually go down to as low as a 540 with the government loans for FHA. With those between 540 and 579, you got to have 10%. Now, if you don't have 10% down and you want to do 3.5% for FHA, you need to be at a 580 and above. For conventional, which is 3% down, you got to have a minimum score of a 620. Now, we also offer different down payment assistance programs, first-time buyer programs. Now, those ones will vary, but most of those you need to have a 640 score. But we just had a new program come out in the state of Florida that can give people up to $25,000 for down payment assistance, closing cost assistance, that can really help them. But again, we got to have you apply to make sure your mid score is at that 640 mark.
Is that Hometown Heroes program?
It is. Yep, exactly.
You want to talk a little bit about that? We were going to ask you about loan programs anyway, since it's new.
Yeah, that's fine. So it just came out June 1st. Basically what the state did is they reserved about $150 million worth of funds to distribute, and you can do 5% or up to 25,000. So if your purchase price is 500,000, 5%, you get up to 25 grand. And what it is, it's for all just hometown heroes. And there's a huge chart that I can send you the link for later on, but it basically is for firefighters, teachers, licensed therapists, correctional officers, nurses, anesthesiologists, and everything in between. So there's like 80 different occupations. The only thing is you have to be full-time in that position and you have to be licensed in that position while at the time of application. But yeah, you can get up to $25,000 for down payment assistance and closing cost help, which for a lot of people, especially struggling with inflation and having to spend more money on things, they're able to really, get into a house for very little money. So that way they can start making it their own and start building wealth.
Right. I have a follow-up question then. In regards to the Hometown Heroes program, can you combine that with like an investment property, or does it have to be for your primary residence?
No, it has to be for your primary residence.
That's fair. All right. Do you guys have any questions before I move on?
I kind of have like a question that's been kind of like lingering on my mind, and I don't know how to maybe directly ask it. It sounds kind of weird, but I'll try my best. So I understand, like, when you get your mortgage, there's what they call quote unquote like discount points. Like your discount points, is that pretty much like that's like your down payment, or is that like in addition to what you put for a down payment?
So it's in addition to actually your closing costs. So when you're buying a property, you have to think of three things you're going to need money for: down payment, closing costs, and prepaids. All of that makes up your cash to close. However, if you're going to be buying points, which is AKA discount points, you're buying the rate to go down. So that would be in addition. So let's say your loan amounts for 200,000, okay? And they say, hey, I can give you 6% with no points, or I can give you 5.75% with you paying 1 point. Well, that means you're going to be paying 1% of that 200,000 is the discount point. So you're paying an extra $2,000 on top of those other three things of closing costs, down payment, and prepaids. Does that make sense?
I guess my follow-up question to that then is the discount point. Are you just paying like prepaid interest, or is that actually going into the what would you call it, the actual like property itself?
You can think of it like you're paying it into the property itself, because you're essentially making your mortgage payment lower. But really what you're doing is you're just buying down the rate to get a lower monthly payment. And in some instances, it makes sense. There are some other loan companies out there right now, though, that are charging people 4 points, 5 points to get a rate. And if you do the math on what the principal and interest payment difference is versus how much they're paying, I mean, for that same example, if they're going to pay 4 points, that's $8,000. Well, if your payment difference between 6% and let's say 5.7 is only $40 a month, it's going to take you months, years, tens of years to make that up. And most people on average move around, 7 years or so. So people sometimes will never make up their money.
And how long does that rate last? For the life of the loan, or only for a certain period of time?
No, so it depends on the loan program. If you're locked into a 30-year mortgage and they plan on having it that long, then absolutely it'll make sense. But there's always a break-even point. Some people it's for 5 years, sometimes 8 years. If they really buy a lot of points, it could be for 200 months. So that's almost 20 years. It sometimes doesn't make sense.
Any other questions?
I apologize about my blinker.
Another question that I have for you, and this kind of a direction that our group, the Global XL group, we're going is we're a lot of us are talking about buying our own like investment properties. So I just was wondering, I'm very curious because I feel like I know it's not a roadblock, and from what I can understand with all of this now being like in the industry, is that I feel like if there's a will, there's a way. But my biggest concern with buying my own investment property, I guess, would be like per se, like the cash up front. Like, and I don't know if that's a myth or not, or whatnot, but can you just like kind of describe what, like, if I came to you and I was like, Brett, I want to buy this like $100,000 trailer. How could we make that work?
Gotcha. So if you're talking a trailer, like it has to be either a manufactured home or like a stick built home.
Sorry, sorry, I should have said manufactured home. I don't want to offend anyone.
Yeah, that's okay. That's okay. I just want to make sure. So with a regular loan, meaning like a conventional FHA, VA, USDA loan, manufactured homes are not allowed for investment properties. So that you would have to either do with what we call a non-QM loan. So you would be doing that with a not government-backed loan. And on those, you're probably going to be somewhere in the realm of like, 25 to 35% down. If you're talking buying a single family home as an investment, you can do it as little as 15% down with a single family home. And then if you want to go into buying an investment on condos, I mean, Florida has 680 miles of beach property, right? Condos are a big thing for us. Then you got to have at least 25% down for an investment condo. So it really depends on the property and what you also plan on doing with it. If you were a first-time buyer and you really knew you wanted to have some investment properties, I would encourage people to do FHA and to buy a triplex or a quadplex, because you have to be in it. You can get in it for as little as 3.5% down. So as far as cash up front, that is your least amount of money to own 3 other rental properties, because you're going to be living in one. And then once you get older, or after a year, you want to transition to a single family home. Now you have 4 units that are completely rented, and you got in it for as little as 3.5% of whatever that purchase property is. That's going to be your least amount of money up front.
Now, like per se, so I'm in my home right now. We don't, at least in a near future, plan on like listing or selling our home, but we would like an investment property. So if we were to move that route, in regards to the 25% and 15% for the condo, and then compared to the was it condo versus a manufactured home?
I talked about condos, manufactured homes, and then single family. Your single family will be the least amount with 15% on the investment.
Okay, it's a single family.
Yeah.
Could those percentages also be combined into like a loan per se, or does it have to just be like cash money?
What do you mean can it be combined?
Could I take out like a separate loan for the 15%?
You can, but it would have to be a cash out refi from another property that you have enough equity in. So you have to be able to give 15% in liquid funds. So whether it's in a checking account, savings account, whether you pull equity from one house and then you draw it off there, but it has to be in the form of cash to be able to do that.
So we wouldn't be able to go to like our bank and get a loan. Let's say it's $100,000 house, get a loan for $15,000 on a single family. Would we be able to do that? Because then you would have the cash funds.
So say that example one more time.
So let's say I'm buying a $100,000 house and I go to my bank and get a loan for $15,000, just like a personal loan of $15,000 for the down payment. Is that something that would be accepted?
You can do that. We're going to count though, whatever that monthly payment is for you on that personal loan. We're going to count that against whatever. So if your payment on that, let's just say is $150, right? If it's 10%, we can use that. As long as your DTI still qualifies, that's an income ratio. Yeah, absolutely. What I also have done in the past was we would upgrade our house. So Alex, you said that you guys don't really have any plans on moving, but let's say you are like, you know what, I really wish I had a pool, or you know what, I really wish I was in maybe a better school area or had more bedrooms because you plan on having more kids, whatever. You could then turn around, buy a primary residence with as little as 5% down, or 5% conventional, or if you did FHA 3.5%, and then you could leave that other residence and rent out the house that you're living in now. And a lot of people will do that instead because it's a lower down payment option. You know what I mean?
And then in a year you could move back, right? If you go the FHA route.
FHA kind of. FHA also has mileage restrictions. So if you have another FHA loan, it just depends on that. But no, FHA is built only for primary residences.
Right. So if you went to if you moved, that would be considered your primary, right?
That is correct. Yes. Because that's primary is really where you're going to put your head on the pillow every night, most of the time. Right. So.
Unless you live in Florida, you're going on vacation every weekend.
Yeah, exactly.
I have another question for you. Sorry, I knew Kendra and I were talking about this. So I'm like, in the heat of it, I'm sure I'm gonna have all these questions.
That's right.
My other question is with FHA, what are the requirements with that?
As far as what? Just qualifying in general for the loan?
Yeah, just qualifying for a FHA.
So you're gonna have again, credit score. Like I talked about earlier, you either got to be at a 580 and above to be 3.5% down. So your credit score is minimum 580. You got to have at least 3.5% to put down. Now that 3.5% can be a gift as well. So if you have somebody who's gifting you money, that can easily work. And then depending on where you're buying, there's going to be a loan amount ceiling. So the FHA loan amount right now, I believe, is 420. I'll double check that right now as we're talking. But anywhere in the state of Florida, you're going to have that loan ceiling where that means the highest loan you can get for FHA is going to be that. Lastly is your debt to income ratio. So depending on a person's credit score and different compensating factors, that we look at, you could be anywhere between 47% back end ratio max, or you can go up to a 56.99. So it gives you a lot more wriggle room as far as purchasing power, especially in this kind of tight market.
Can I also ask you a question once you're under contract on that one? Just to clarify for people,
Sure.
because I'm currently under contract on one as of last night. So my buyer's like, wait, so what happens now? He's like, do we have a special inspection? Do we have a special appraisal?
Gotcha. So congrats on the contract, number one.
Thank
And
you.
number two, the inspection is really for them, but we as a lender, we don't care about the homeowner's inspection.
Mhm.
We only care about the appraisal, and the appraisal is no different than a conventional appraisal. It's just, I guess, special just because it's an FHA appraiser rather than a conventional appraiser.
Mhm.
And an appraiser has two different certifications, one for conventional loans, one for FHA loans. So that's really the only difference. Now, FHA appraisers look at stuff a little bit more thoroughly. So they look at more health and safety type stuff. But it's really no difference. So as long as there's no, water stains on the ceiling, and, the roof looks to be in good shape, and, there's nothing really health and safety that's sticking out, it's just as good as a conventional appraisal, to be honest.
That part of the FHA appraisal was making him think that he needed a special inspector who did FHA inspections. And I was like, no.
Yeah, no. Inspection wise,
But I think it's a common question and misconception that inspections and appraisals to buyers sometimes get a little bit mixed up, and they don't really know the difference sometimes, I think.
yeah, no, definitely. Even like you said, inspection and appraisals, they think sometimes it's all the same thing. And I
Correct.
gotta tell them, I'm like, no. Like I highly encourage getting an inspection. It's not needed, but I
Mhm.
highly encourage it because you're spending hundreds of thousands of dollars, right? But in reality, us as the mortgage company, we only really care about the appraisal because we want to make sure the value is going to be there.
Thank you.
You're welcome.
Now, any other question? Because I have one final question before we go, but any other questions from you guys? Because we are getting to be at that time.
Brett, what's your shirt?
So I went to Disney World with my son as he turned 5. And if you watch Zootopia,
Yes.
it's got the fox on it, and it
Thank
on
you.
the side you can't see it, but it says it's called a husband, sweetheart, like from the movie. So I thought it was just hilarious, and I was like, babe, I have to have that shirt. So
I love it.
thank you.
All right, my final question. We've talked a lot about FHA. In this market, what are you seeing? Are you seeing a lot more FHAs getting accepted?
Kind of the opposite right now. So we're seeing a lot more conventional loans getting accepted. I really think having a strong lender in your corner, working with your agent is crucial, especially in this market. Because what I do is anybody that we have pre-approved, when they're making an offer, regardless if it's FHA, VA, conventional, whichever, the listing agent and the seller just really want to know, hey, if we take this offer, let's say you're the best offer, that the loan's going to close. Because people have heard horror stories from other realtors and other listing agents and stuff online. My job is basically I call them and I tell them, look, here's all the stuff that we've done. This is why having a thorough pre-approval is so crucial. We look at their income. We have their pay stubs. We've already done all the legwork to where I basically tell the agent, say, look, if you take this offer, all you got to worry about is the inspection, which if you say the house is good, that's not an issue. And the appraisal, which if you have comps, that won't be an issue either. But this will be an easy deal. I update you once a week, normally Tuesdays or Wednesdays, and we'll get this deal closed on time. So FHA is now starting to loosen up because the market, even though it is super hot, has starting to kind of cool down slightly. We're seeing a little bit more in price decreases by a few thousand here and there. So I think it's going to give up more openings for the FHA buyers.
I agree. We've seen a couple acceptances lately in our group, so
Nice.
hopefully seeing a little bit of a change there.
Awesome.
All right, so I lied. That was the last, actual question I had, but where can people find more information about you? You have a great newsletter, so I want people to be able to sign up for that.
Thank you very much. Yeah. The newsletter wise, if you're interested, I can put you on our mailing list for that. You can find me at guildmortgage.com, and you just look up Florida Brett Cooker. I'm 6 foot, red hair, pretty easy to spot online. You can also do Lending by Brett, is my website personally, but I'll send you guys my contact info as well. So with all new programs that just come out, so that way you can help keep your buyers updated. And if you have any questions, you can also hit me up on Facebook Messenger. I mean, always available, phone, email, text. Just
Awesome.
We'll
moving
put that
forward.
info in the description.
Yep, exactly. I was just about to say
Oh.
that. All right, guys. Anything else before we let him go? No, Brett, thank you
Okay.
so much for coming on. We appreciate you
Yeah.
so very much.
No,
Thank you, Brett.
Thank you.
Appreciate it, guys. All right. You guys have a good rest of your day. Okay.
Thanks, you too.
Awesome. Thank you.
All right,
Bye-bye.
guys. Don't forget to like and subscribe.
Like and subscribe.